Let us come to unauthorized colony. Okay. Now you can read this provision, Rule 11 UAC, and you will come to know that this term is very peculiar, unauthorized colony. When I heard it for the first time, I was myself kind of like, unauthorized colony. The word unauthorized, that itself, surprises you, takes you aback with surprise. So I just went deeper into it. What is unauthorized colony? Okay, it is given in Rule 11 UAC of income tax rules. Unauthorized colony means, of course, the rule says that it shall have the meaning assigned to it in the National Capital Territory of Delhi Rule Act 2019. So I went inside the rule, inside that act, to find out what is the meaning of unauthorized colony. What happens is there are certain colonies, there are certain areas in the National Capital Delhi, National Capital Region of Delhi, where proper permissions have not been taken and the people have built their homes. Then those persons started owning those houses or flats. For that purpose, they were having some agreements. Some people became the owner on the basis of power of attorney. There were no agreements. Some people simply paid the consideration and started staying in that flat or in that house. Those were not proper permissions taken, and then the houses were built. That particular case did not happen in these flats. Without taking proper permission, these flats were built. So that is why they are called unauthorized colonies. Proper permissions were not taken. Okay, that is the meaning of unauthorized colony, and it is only with respect to National Capital Territory of Delhi. This particular term does not refer to any other region in the country. A person who is staying in such unauthorized colony, who possesses any property in such unauthorized colony, is called resident of such unauthorized colony. Now, what is the provision? Okay, Rule 11 UAC. It says that Section 56(2)(10) shall not apply to any immovable property in unauthorized colony. So we saw what is unauthorized colony. We saw who is a resident of unauthorized colony. Unauthorized colony means in Delhi, if any property has been built without taking permission, it becomes unauthorized colony, and the person who is staying in such unauthorized colony is the resident of such unauthorized colony. Now, what is the relevance? Section 56(2) subclause 10 does not apply to such unauthorized colonies. What is the meaning of this? Okay, so then I went to Section 56(2) subclause 10. That Section 56 does not apply. What is Section 56? Okay, well, there is a query from Raghu sir. Not capital territory is same as NCR. Yes, you are right. National Capital Region, National Capital Territory. You are right. But this is a language of law, so they are using that particular language, National Capital Territory, and this particular term, National Capital Territory, is used in that act, National Capital Territory of Delhi. And there is some term, Act 2019. That is why they are reproducing that. But what we call it is National Capital Region. Absolutely, the area surrounding Delhi, right? So then I went to Section 56. Section 56 is about income from other sources. Do you remember in our regular lectures we had said that there are 5 heads of income? The income from salary, income from house property, income from business, income from capital gains, and finally there was income from other sources. This income from other sources is governed by Section 56. Okay. Under Section 56, it says that any income which is a residuary income should be classified as income from other sources. Then I again went deeper into it. What is Section 56 subsection 2? Section 56 subsection 2 states that there are certain specific instances of income which should be classified as income from other sources. Specific instances. So in that I went to clause 10. That what is clause 10? Clause 10 specifies that if I have written there, you see the last bullet point, I have written in a nutshell that if any person receives a gift in excess of rupees 50,000, 50, I'm just simplifying the whole section because clause 10 uses a very legal language, that money received without any consideration. It is nothing but gift in simple language. So if you are receiving a gift in excess of rupees 50,000, up to 50,000, no implications. But beyond 50,000, any gift received, it is taxable as income from other sources. Okay. If I do not receive it as a gift, but if I receive a particular property, immovable property, without consideration, that is, somebody gifts an immovable property to me, and if the value is more than 50,000 rupees, then it will be still treated as income from other sources. The person who has received the immovable property. Okay. Now the next question came to me, that if immovable property is being gifted to me, it will be treated as my income. But immovable property, when somebody is gifting it to me, it is being gifted at value which is 0. Then how will I determine the value? Any answer? Any answer on this? That if the value is there, it is being gifted, then how am I going to check the value? Any answer on this? Yeah, somebody is typing. I can see that. Circle rate, stamp duty. Circle rate is something similar to the stamp duty. So I will take stamp duty as the answer, right? So when somebody is gifting the property, it is a stamp duty which should be taken as my income. Okay. Now, how, let us correlate these two sections now. Okay, that which two sections? That person, if he's receiving any flat, any house as a gift, it becomes the income of the receiver. If I'm receiving the flat as a gift, it becomes my income. The stamp duty value becomes my income. Number one, as per section 56(2)(10). But this particular provision does not apply to unauthorized colony. So if you are staying in an unauthorized colony, you are owning a flat in that unauthorized colony, you are gifting it to a third person, your relative, whatever. In normal circumstances, the person who is receiving the property, it will be treated as his income. But because the property is in unauthorized colony, even when I am gifting it to a third person, it will not be treated as income of such person. This is in short the provision. If you simply read the supplement which is given on the website, you will not understand anything. So in this lecture now you have understood that these two are together. You have to read section 56(2)(10) and unauthorized colony rule 11 UAC together. Is the rule clear? First of all, is the rule clear? Any doubt in this you can ask, because once we go ahead, then you may forget this. So any doubt, you're free to ask me. I will just wait for a couple of minutes. I'll wait for you. Any doubt, you can ask it. Because this is a very typical provision. Because when I read it, I was required to go deeper and deeper inside it. First, what is unauthorized colony? So go to Rule 11 UAC. Then how it is related to Section 56. So go to Section 56 and like that. In short, Raghu is writing, there is a query. In short, except Delhi and NCR, this applies to whole of India. Yes, applies to whole of India means anywhere in India, if you are gifting your flat to a third person, the person who receives the flat, it is the income of the person who is receiving the flat. But in Delhi also, if you are gifting a flat, the receiver of the flat will have to treat it as his income. In Delhi also, in National Capital Region also. Only if in Delhi you are staying in unauthorized colony, only then this rule does not apply. I think this is very much clear. Okay, for example, there may be a question that Mr. A stays in unauthorized colony in New Delhi. Okay, he has gifted his immovable property to Mr. X. Okay, the stamp duty price of the property is 50 lakhs, 50, and the property is gifted for free. The property is gifted to X. Will it be treated as income of Mr. X? Yes or no? Yes, you have to give the answer. It will be treated as income of Mr. X or no? Raghu is saying no. Disha is saying no. Komal is saying no. Avani is typing. Let us see what she is typing. Okay, I think every answer is no. Absolutely. That's a correct answer. You get full marks for that. Because Mr. A is staying in unauthorized colony. Okay, now the same question. Mr. A is gifting his property to Mr. X. Stamp duty value is 50 lakhs. But Mr. A does not stay in unauthorized colony. He stays in a proper area of New Delhi and he is gifting his property to Mr. X. In this case, that 50 lakhs, which is the stamp duty value, will be taken as income from other sources for Mr. X. Am I right? Yes. Yes. So everybody agrees. Sanjana also agrees. So we'll go ahead. Before we go ahead, section 56 to 10, let me tell you students that even though it is not a part of this particular supplement, it is a very interesting section. You know that earlier what had happened was, earlier there was a gift tax, that if I'm gifting any amount to a third person, then the person who used to receive the gift used to pay gift tax. Then the gift tax was abolished and now government was losing the revenue. So government brought this particular provision that if you are receiving any gift in excess of 50,000 rupees, then you have to pay income tax on that gift. That is how the provision was brought. Okay. Now you know that all the people, whether in India or outside, whenever any, we sometimes unnecessarily curse Indians, saying that Indians try to find the loopholes in the system. But it is not only Indians, it is a worldwide scenario that whenever any income tax, any tax law is there, everybody tries to find a loophole. So what we did, the government said that if you give gift in excess of rupees 50,000, if you give sum of money in excess of rupees 50,000, it is taxable. What people started doing? Okay, we will not give sum of money. We will give property, immovable property or movable property. I will give shares. I will give debentures. I will give fixed deposits is a sum of money, but I will give shares. I will give debentures. I will gift any other movable property, or I will gift immovable property. I am having a flat worth rupees 75 lakhs. I want to gift it to my son, or I want to gift it to my wife, or I want to gift it to my best friend. I will gift it. Instead of gifting 75 lakhs cash, I gifted house property. So then government started losing the revenue because the act said that if you gift cash or sum of money, only then there is tax. People are now gifting shares. People are gifting immovable properties, other movable properties. There was no tax. So government came up with this amendment in the law saying that even when you are gifting movable property or immovable property, it will be treated as a gift, and the receiver of such gift will have to pay income tax. So earlier also I have said it to you that Income Tax Act was very simple earlier, but as people started finding out the loopholes, it went on becoming complicated. First, government had only said if you receive any sum of money, it is taxable. But then later on, people found out this via media. So one more section came that if you transfer immovable property, that is also taxable. Take this. So people find out newer ways of circumventing the law, and government keeps on bringing the new sections to plug the loophole, and that is how the act goes on becoming more and more complicated. Even when people are, there are a lot of talks nowadays of simplifying income tax law, but let me tell you, it is a very difficult task, because if you simplify the law, there are many loopholes which are left in the law, and then people very well. Once the loopholes are left, best benefit is taken of the loopholes. So it is actually practically very difficult to simplify. Anyway, so that was just a history of section 56(2)(10). First Gift Tax Act was there, it was abolished, and that is why 56(2)(10) came into picture. And then because people circumvented that section, additional section came into being. So I just wanted to discuss that history part with you all. A history of income tax is very beautiful. I mean, if you really see how the Income Tax Act has evolved over a period of time, we read history like since school time, and we really like history. Most of us like history. Income Tax Act also has history, how it developed over a period of time, and it is very beautiful how the logic has evolved. You need to be a student of Income Tax Act. In fact, I'm sure that the same must be the case with company law and all other laws. These laws have evolved over a period of time in a very beautiful manner. So simply talking about simplification, I don't think is going to help. Okay, so this was all about unauthorized colonies. This was all about section 56(2)(10). In nutshell, section 56(2)(10) does not apply to unauthorized colonies. So we go to the next. Corrigendum to circular number 4 on TDS on salaries. See, we have already seen TDS on salaries in the last lecture. This is something in addition. We did not take it up at that time because we are going in the same way in which the supplements have been given. I don't want to disturb the flow. That is why I'm taking it now. Quickly read what is given on the screen, and then we will discuss what is there. They are saying that in circular number 4, dated 16 January 2020, on the above mentioned subject, it is to state that para 3.1 under the heading method of tax collection is modified as follows. For sentence 3, let us not concentrate on that number of sentence and the para number. Let us focus on what is the gist. See, what was earlier written there? No tax, however, will be required to be deducted at source in a case unless the estimated salary income exceeds 2,50,000 or 3 lakhs, depending upon the age, may be read as, that above paragraph may be read as, no tax will be required to be deducted in case unless the estimated salary income is taxable after giving effect to the exemptions, deductions or relief as applicable. Accordingly, check the last line. The TDS on salary is required to be deducted if the estimated salary income, including the value of perquisites, is taxable after giving effect to the exemptions, deductions and relief as applicable. Okay, now you read this. There are 3 paragraphs. The first paragraph tells you what was the provision earlier. The second paragraph tells you what is going to be the new provision. substituted provision, and the third paragraph tells you what is the meaning of this substitution. What is your opinion on this? Because as such, this is only one slide and it ends it there itself. The next slide is something different. So this is the only change so far as this circular number is concerned. What is your opinion on this? Let me know that first. No tax will be required to be deducted at source unless the estimated salary income exceeds 2,50,000. No tax will be required to be deducted at source in a case unless the estimated salary income is taxable after giving effect to the exemptions. What was the problem which the government tried to amend by making this provision? See, always remember, I have told you, any new provision coming in, something is going to be rectified. What do you think is the rectification that was required to it? What was the mistake? What was the anomaly in the old para? You are income tax student, so you should be able to answer this question. You are all typing. Let's see what are the views which are going to come up. If a person has income up to rupees 5 lakhs, no TDS is affected. I guess so. Okay. Avni is typing. Let us check what Avni has to say and then we'll go ahead with our opinion. Sanjana is also typing. Avni says the effect of exemptions, etc. Okay, Sanjana is typing. All right. Well, this is very interesting, this particular slide. When I read it for the first time, burden on TDS is reduced. When I read it for the first time, I felt that, well, this is such a simple provision. But then I went deeper into the provision. I realized what was the mistake which they rectified. What was the anomaly which they rectified. See, now I will tell you. Earlier, what was the provision? That if the salary income exceeds 2,50,000, you have to make TDS. Right? If the salary income exceeds 2,50,000, make the TDS. Now, if I am drawing salary income of 2,50,000 rupees, you know that 2,50,000 up to 2,50,000 there is no tax. Right? After 2,50,000 there is a 10% tax, 5% tax. What the government said earlier, if your salary is 2,50,000 and above, employer has to make the TDS. But is the tax payable? Because my income is 2,50,000. Let us say my income is 3 lakhs. Then quickly tell me what is the amount of tax? What is the amount of TDS on 3 lakhs? See, there is a 5% rate of tax. From 2,50,000 to 5 lakhs, the rate of tax is 5%. So if my income is 3 lakhs, 1250 on 50,000 rupees, 1250. How did you get that, Raghu? 1250? Can you explain that 1250? You said it. It is 2,500. 2,500. That is right. Why 2,500? 3 lakh salary up to 2,50,000. There is no tax. 2,50,000 to 3 lakhs on that 50,000 rupees. 5% is 2,500. So employer will deduct 2,500 as per the earlier provision. But now look at this. The provision says that if my salary is 3 lakh, TDS has to be deducted. But this particular section was not considering the fact that if my salary is 3 lakhs, but suppose if I am making investments which are eligible for deduction, my investments are 25,000 rupees, then my income is no more 3 lakhs taxable income. It is only 2,75,000 because 3 lakhs income minus eligible investments 25,000. My income is only 2,75,000, right? I am earning salary income. So there is a standard deduction on that. How much is the standard deduction? 50,000 rupees is the standard deduction. Now 2,75,000 minus 50,000, my income is 2,25,000. My income has fallen below the taxable limit. So no tax should be deducted. But the old provision said that once my salary crosses 2,50,000, TDS has to be made. But actually I have saved a lot of money. Eligible for deduction. I am having standard deduction. Still my TDS is going to be deducted because of this anomaly in the provision. So government changed this provision that TDS is to be deducted only if the salary is taxable. Earlier wording was if salary exceeds 2,50,000 make TDS. Now the wording is if salary is taxable after giving effect to exemptions only then make the TDS. So in the instant case, the person who is earning 3 lakhs, first of all, he has made eligible investments of 25,000, standard deduction of 50,000. His salary is not taxable. So as per the new provision, no TDS will be made. But as per the old provision, employer would have made a TDS of 2,500. So this was the anomaly which the government tried to bridge. Is it clear why this particular provision has been brought in? Is it clear to you? Very interesting. These amendments, these supplements are very interesting. Yes. Yeah, I think it is clear. Relief, what type of relief you are talking about, Raghu? What type of relief you are talking about? Section 87. See, Section 87 relief is, you are right, rebate. It is not relief, it is rebate. That is another calculation. Absolutely, you are right. That is another calculation. That rebate also is further available. So already my income is below taxable. With rebate, it is going further down. Okay. So it is like that. So that is why the change was brought about. And this new section is here in front of you. Okay. So such small anomalies remain in the law which the government tries to rectify. We'll now go to the next section. Okay. A very important one. Just clarify ourselves on this and then go ahead with the discussion. Okay. Circular number 8, 2020, dated so and so. Clarification regarding short deduction of TDS and TCS due to increase in the rates of surcharge. Okay. Now read this carefully. This line I have picked up from the supplement. Looks like little complicated, but once I discuss it with you, you will come to know that this is a pretty interesting thing that they're talking about. What does the slide talk about? The Finance Act 2019 provided for increase in the rate of surcharge. See, you have seen that how the rates of surcharge have been increased. It was 5%, 10%. For certain highest categories of income, it is 37% and all. So there was a lot of surcharge. Okay. The rates were applicable from 1st April 19 for the previous year 1920, assessment year 2021. Accordingly, TDS is to be deducted after considering the enhanced rate of surcharge. This is especially true in the case of salaries. This is especially true in the case of salaries, that if the any TDS is to be made, you have to consider what is the surcharge, and accordingly the TDS is to be made. In the above situation, the deductors were held to be an assessee in default for short deduction of TDS in cases where the final transaction was done before laying of the Finance Bill 2019 in the Parliament. That is 5th July 2019. Read the dates very carefully. Since the transaction was completed before the rates of enhanced surcharge were announced, and concerned deductee is required to furnish their income tax return for the relevant assessment year, it has been requested that in such a case the deductor should not be held an assessee in default under section 201. I will just take you to the next slide. This is the slide which I was referring to, that the surcharge had increased. I will once again read out the whole provision for you. The Finance Act 2019 provided for increase in the rate of surcharge. These rates were applicable from first day of April 2019 for the previous year 1920. TDS is to be deducted after considering enhanced rate of surcharge. In the above situation, deductors were held to be an assessee in default for short deduction of TDS in cases where the final transaction was done before laying the finance bill in the Parliament 5th July 2019. Since the transaction was completed before the rates of enhanced surcharge were announced, and the concerned deductee is required to furnish their income tax return for the relevant assessment year, it has been requested that in such cases the deductor shall not be held as assessee in default under section 2021. Okay, see the dates. 5th July 2019, this bill was put up in the Parliament, right? Before that, the bill was like the effect was given from 1st day of April 2019 for the year 1920. Now, so yeah, just a moment. So here we end. These are the two slides. We end with this particular circular. Okay. Now let us discuss this circular. Circular number 8. What this is. As I told you, this mainly relates to the salaries. Deduction from salaries. Now what was happening was that when you are making a TDS, you are required to collect surcharge also in the TDS. The surcharge provisions were brought in the Finance Act 2019. Earlier also that surcharge provisions were there, but they were very few. Okay, there were very few surcharge provisions. Now they brought surcharge provisions with 4 slabs. Income from 50 lakhs to 1 crore, 1 crore to 2 crores, 2 crores to 5 crores, and 5 crores and above. So there were a lot of slabs which were creating a lot of confusion. Earlier the provisions were pretty simple. Now what happened? The problem was the intermediate problem. The companies were complying with all the rules, but what happened? The rule was with effect from 1st April 19. So the companies were required to deduct the TDS and surcharge from 1st April 19. But the companies were waiting because even though the provision was made effective from 1st April 19, it was not passed by the Parliament. And you know that companies felt that the provisions may be rolled back. So even when liable to do so, companies did not deduct the surcharge because they felt tomorrow if the provision is rolled back, what will we do? So let us wait for the Parliament to clear this particular provision. Then we will start deducting the surcharge. Okay. Now, in the meantime, what started to happen, that income tax authorities Now the companies had not deducted the surcharge from 1st April to 5th July. 5th July was the date when it was passed by the parliament. Okay, and the companies had not deducted because companies were waiting for the parliament to pass it. So for April, no surcharge was deducted. For May, no surcharge was deducted. For June, no surcharge was deducted. The company started deducting from July. So for these 3 months, there was no surcharge deducted. What the income tax officers started doing, they started telling the companies that you have not deducted the surcharge for these 3 months. I will recover this surcharge from you and I will also recover the interest from you. So the companies represented in front of the central government saying that this provision had newly come up. So we waited for the parliament to give the approval. Thereafter, we have started making the surcharge reduction. So please do not recover this surcharge from us for April, May and June. And that particular request was accepted by the parliament, and the surcharge was not recovered from these companies. Now, before we go ahead, let us discuss what is assessee in default. What is assessee in default? Well, are you able to see the full presentation which I have made? Well, I'll just close. Something is coming up here. Yes. Can you see it now, the full presentation? Yeah. You're typing. Yeah, I think you are able to see it. You're not typing means you are able to see it. So let us see what is an assessee in default. What happens is under Income Tax Act, there are various TDS provisions. TDS from salary, professional fees, etc. So whenever you are making any payment, you are required to deduct the TDS. If you do not deduct the TDS, you are treated as an assessee in default. That means the money will be recovered from you along with interest. Okay, that is the provision of assessee in default. So in this case, the income tax officer started saying we'll recover this surcharge from you. But the companies were saying, look here, we did not deduct the surcharge only for 3 months, April 19, May 19 and June 19. From July 19, we have started recovering the surcharge. So for these 3 months also, we'll collect the surcharge. In due course, do not treat us as in default assessees. This was the request made to the government, and the government accepted this request, and this notification was made that for these 3 months, these companies should not be treated as assessee in default. No, this is a little confusing clarification. This is a clarification, little confusing. So I discussed it in length, much greater in detail. Any doubts in this? So that I'm just waiting after every amendment for a couple of minutes, for you to go through that provision again. And if any doubt is there, I'll clarify. Yes, any doubt? Please let me know. If there's no doubt, please write that everything is clear so that we can go ahead to the next provision. Yeah. Please let me know the feedback so that I can go ahead to the next provision. Concerned, I'll go ahead. Electronic modes under section 269 SU. We'll read this provision. Okay, well, this is only a clerical provision. We have already covered a similar provision in the last lecture. So this particular provision is not going to take more time for us. In furtherance to the declared policy, I will read out. In furtherance to the declared policy objective of the government to encourage digital transactions and move toward a cashless, not less cash, cashless economy, a new provision 269 SU was inserted, Wide Finance Act 19, as per which person carrying on business and having sales more than 50 crores in the immediately preceding previous year to mandatorily provide facilities for accepting payments through prescribed electronic modes. It is hereby further clarified that the provisions of this section shall not be applicable to a specified person having only B2B transaction, no transaction with the retail customers, if at least 95% of the amounts received are by any mode other than cash. This is the provision. See, before we see this particular amendment, let me tell you what is section 269 SU. Section 269 SU is a new section which has been brought about. You know that the current, not the current government as such, it is the government's initiative to the department's initiative. Rather than saying government's initiative, I'll say it is the department's initiative that the department wants to go towards the cashless transactions. Income tax department wants to discourage cash transactions, and therefore the use of electronic mode of payment is more and more encouraged. Cash transactions are discouraged. So from that point of view, this section was brought about, and this section said that if any SSE is having a turnover of more than 50 crores, so big SSEs, small SSEs are not covered by this section. Big SSEs only are covered. So if you are a very big company, a company having a turnover of more than 50 crores, then it is a huge company. Then on your counter, you have to make provision that the people should be able to pay by debit card, credit card or whatever. You have to keep those provisions over the counter. If you are not doing so, then there are penalty provisions which are specified under section 269 SU. So this is section 269 SU, that if the turnover is more than 50 crores, your company has to make the provisions over the counter so that people can make electronic payments. That is section 269 SU. Okay. Now, what is the further clarification which has come in this? Okay. It says that if your company is having only B2B transactions, B2B means business to business, that is, you are not making any retail sales. You are only making wholesale. I will say wholesale transactions only you are doing. In simple language, you are only doing wholesale transactions. There are no retail transactions. Over the counter transactions are not there. Then this section won't be applicable to you. Section 269 SU, because anyway there are no over the counter transactions, so there is no question of 269 SU becoming applicable. But in that there is one condition, that if you are having only wholesale transactions, only B2B transactions, even then one more condition has to be satisfied, and that condition is that what money you have received from your wholesalers, your B2B transaction people, that money received, 95% of the money received should be non-cash receipt. That is, only 5% cash you are allowed to receive. 95% or more you have to receive your payment by electronic mode anyway. Then the relaxation is given. What is the relaxation? If you are having only B2B transactions, no B2C transactions, and 95% money is coming from cashless way, if these two conditions are satisfied, then the relaxation is you need not keep the electronic mode facilities over the counter. Okay, well, this is only a clerical provision according to me. I think a lot of energy has been invested on making this provision because I don't know, I mean, a company which is already receiving 95% of its income by check or by electronic means, what big concession you are giving by adding this particular line? Anyway, this is a provision, and we are students of income tax, so we have to study this. Clear to you? Because there can be a question, let us say, what kind of, how they will frame a question, a 1-mark question on this, that there is this company XYZ Limited. It is having a turnover of let us say 49 crores. 49 crores. All transactions are B2B transactions. All transactions are B2B transactions. Is a section 269 SU applicable? What is the answer? The turnover is 49 crores. Is 269 SU applicable? Yes or no? No, exactly. Because above 50 crores only this particular section is applicable. Below that it is not applicable. Another example. The turnover is 75 crores. So you are now covered by section 269 SU. XYZ Limited, the turnover is 75 crores. So you are covered by 269 SU. That XYZ Limited is having all its transactions with B2B customers, wholesalers, no retail transactions. Company has received 90% payment by non-cash methods, 10% payments have been received in cash. Is 269 SU applicable? No. No. 269 SU is not applicable. See, turnover is 75 crores, so 269 SU is applicable. B2B transactions only, no B2C transactions. But one more condition has to be satisfied. I have said that 10% money is received in cash. Only 5% you are eligible to receive in cash. You have received 10% in cash. 269 SU is applicable or not? Come on, you are thinking so much. See, this can be a question in the examination. Or of course, they can frame it in a different manner. But come on, I want answer. Yes, at least one person is typing. Okay. Not applicable. No idea. Sanjana is typing. No. Come on. Well, I will not wait for Avni to type. See here, 269 SU is applicable. The turnover of company is more than 75 crores. So it is anyway applicable. But there is a relaxation. If you are having a B2B sale only, then 269 SU is not applicable. So it is not applicable here. But even when you are doing all B2B transactions, 95% has to come from non-cash. Here only 90% is coming from non-cash. There is a violation. 269 SU is applicable. The company will have to provide those means there. Do you agree? Yes. Yes, I think everybody agrees now. So this is how you have to read the sections very carefully when you work. Okay. So I think this electronic modes section 269 SU is quite clear to everyone. We'll go ahead and yes. This is just a notification sort of. Shri Rama Janmabhoomi Tirtha Kshetra, central government hereby notifies Shri Rama Janmabhoomi Tirtha Kshetra, PAN number so and so, to be a place of historic importance and a place of public worship of renown for the purposes of section 80G 2B from year 2021 relevant to assessment year 21-22. I think no discussion is required here that Shri Rama Janmabhoomi Tirtha Kshetra, it is a charitable trust which has been founded. If you make any donation to Shri Rama Janmabhoomi Tirtha Kshetra, it will be eligible under section 80G, and to make it eligible under section 80G, this particular notification has brought into picture. Okay, so there is not much discussion is required here.